Let's bring in Rebecca Walser, Walser Wealth Management President. Rebecca, where are we right now in terms of getting these jitters out of the way? It certainly feels like from a geopolitical standpoint, this could drag on a bit longer. How big of an overhang does that create for the market?
It's so true, Kiko, and it's almost like we want, an abrupt correction if we're going to have one, and then a stabilization, because the small little, just constant nipping at the market on all indexes is what we don't want, because, people underestimate what that adds up to, 1% or less. I mean, all of the indexes right now are not even down 1%. So that is not big, right? But if you get a 1% day, a 2% day, and you get enough of those, you've got a substantial problem on your hands. So I would rather have a great disruption and then have a recovery quickly than having these small, nipping, long. It kind of reminds me of the dot-com crash. It took 3 years for the S&P to lose 49%, and that was just a painful slog that we don't want to go through again. So war has a way of making the market jump down, and yet I just don't think the market is severely reacting this morning just yet, because we're not exactly sure what these peacekeepers are, or is it going to lead to war or not? And, I would just say, Akiko, this is Russia. This is a global superpower. This is not Iraq. This is not Afghanistan. We have to stop and sit back and really assess what is our risk to getting involved, especially with the Ukraine not being a member of NATO. What is our risk of getting involved in this to a deep extent? I don't think the Americans have any kind of appetite for war, and I think maybe the market is taking this in stride with that kind of mentality in mind.
Rebecca, it's Brian Chung here. So we did, however, yesterday get a technical correction on the S&P 500. What is the psychological significance of that? Because you have some people wondering, well, maybe that's just the sign for us to start bouncing back after all of this. But then you have others worried, well, this is just the beginning of what could be a longer, steeper decline.
Yeah, I wish I could say that I was an optimist, Brian, but I have to say, I have never in the history of America seen the economic fundamentals and the geopolitical fundamentals and the health fundamentals line up globally like this. This is unprecedented. I mean, we still are in the middle of a global pandemic, and as much as we have made strides to combat it, it's still impacting supply chains around the world, and it will continue to as China shuts down manufacturing plants and those kinds of things. So we're not through the woods on that yet. We have the supply chain disruptions. We have major chip shortages. We can't connect the IoT, Internet of Things, to everything. And then on top of all of that, we now see two other global superpowers, both China and Russia, that are basically starting to expand their territories potentially. I believe that China will see with Taiwan soon. We were waiting for the Olympics to end. Now that Russia's taking these steps, I think China's going to be emboldened. So I don't see, unfortunately, any solid economic fundamentals that are going to give this market a great rebound and say, okay, it was just a little correction, a blip on the radar, and it's going back up. I don't see that, Brian. I wish I could, but with anywhere from 10 to 12 million job openings, 7.5% core CPI year over year, and 9.7% PPI year over year. I just don't see a silver lining in this cloud. I'm sorry. I wish I did. Trust me, I look for it every day.
And it sounds like, Rebecca, you're moving your money away from some of these risk assets. You've said that you're taking profits right now, moving over to gold. Yesterday, we saw gold futures hit the highest price we've seen since June of 2020. How much higher do you see that going?
We're seeing a really strong resistance level of 1920 to 1930. So if we can break that resistance level, then I do believe gold could have even a 20% pop this year. It depends, Akiko, with what the market does. People like gold when the equities are really starting to show red. And so if people start to really believe that, okay, this is not a blip, this is going to head down further, then they will make the move to safety. And unfortunately, crypto is still under too much regulatory scrutiny with everything that's going with Gary Gensler and the SEC and Ripple, that we just can't take the risk of crypto being regulated in a way that's not popular. So we're going to go with the tried and true gold for now and let this dust settle, because this is going to get ugly, in my opinion.
Okay, Rebecca, I mean, that very bearish commentary there. So what else do? You just take your whole portfolio, go risk off and hide in U.S. Treasuries? I mean, is that the play?
No, we can't do that either right now, Brian, because we know rates are going up, right? So what happens when we buy treasuries and rates go up? Those values go down. So treasuries aren't even really a good play right now. I mean, I would say that right now, and this is very temporary. I don't want people to think, oh my God, I have to go sell everything and sit on the sidelines. I'm talking about short-term plays. If we're talking about long-term investors that don't need to see, distributions for 20 years, 10 years, 15 years, maybe they can afford to go through this and hold through it. And I'm not suggesting that everybody should sell out and move to gold. I'm just suggesting that is probably likely what the market will do as these circumstances escalate. We're seeing this global convergence of all of these factors that I've listed, and it's unprecedented, and we have no historical protocols or benchmarks on how the market will react. And I'm sorry to say that I am seeing a substantial downside reversion to the mean even before coronavirus. Yes.
All right, a warning shot from the bow, of course. Caution, 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 regardless of where you are. Rebecca Walser, Walser Wealth Management President, thanks so much for stopping by this morning.